All right. Good afternoon, everybody. Sorry about this small delay. Where'd my disclosure go? There it is. All right, let's start with our disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, the only change here is that I now have a small amount of Netflix. Not big, a little bit of Netflix for today. All right, charts. How did we close? Closed, I guess, a little bit better than where we opened. SPYs are down 0.25%. Qs are exactly flat. Russell, that's the impressive one, honestly, is the Russell's closing flat here. We got pins running here after hours. Pins up 19%. I didn't get to look at the numbers, and I even have a little bit of pins into the report, so I should probably take a quick look at that. Let me see. Q2 missed on earnings, beat on revenue. Monthly active users decreased 5% year over year to 433 million. I don't know what that is a comparison to. Thanks to Pat for getting all this stuff in there. It's a beat, though. It's a beat on the monthly active users. Commentary and guidance. Yeah, guidance is gonna be key. I'll take a further look at that a little bit later. See Josh posted more information there also from Elliot. Yeah, pins is a good one, right? This is the one we I know Pat's been talking about Pinterest for a while as a value play in here, that he likes it. It's got positive free cash flow. It's got sounds like it's got better fundamentals than like Snap does. Um, Facebook's obviously the mammoth in the room when it comes to social media. So anyway, let's go back to our market here. Let's start with the big picture. Okay, so rest day today. This is what we talked about in the morning meeting today. It's been a really big 3-day move. We had a gap down this morning, which makes it a little bit tricky. Common gaps tend to get filled, and it was a common gap to the downside. Right? We gapped down and we filled that gap. Common gaps tend to get filled. But it's a tricky gap fill because where we're set to open, we're still so extended that it's hard to have conviction and just come in and buy a smallish gap down after 3 really big days in a row when we're this extended. But the gap down also kind of takes away a lot of the shorting opportunity. And I did, for the second day in a row, trade some TZA back and forth. On Friday, I was, I started buying TZA and I bought you VIXI, both of them pre-market, because we're gapping up so big on Friday with the Apple and Amazon earnings that I thought it was a kind of good hedge to my long portfolio after a really big move. And I was going after the IWM specifically and avoiding the Qs because the Qs are trading so well on Apple and Amazon. And today, I didn't keep those hedges over the weekend. Instead, into the close, I reduced my longs. So for me, this was actually pretty perfect this morning. I think if you came in today flat, it's very difficult. Because like I'm saying, do you come in, do you buy this common gap down after a really big 3-day move when we're still extending on a daily? That's difficult. But if you're thinking, hey, 3 big days in a row and we're extended, I want to short, the common gap down kind of takes that away. So for me, with swing positions on, this actually worked to my advantage because I did choose to get out of my hedges into the close on Friday for what turned out to be a small loss because this IWM didn't really trade as well as the Qs during the day. So I took a small loss on my hedges on Friday. I did not keep them over the weekend. Instead, I sized down my longs. And I just kind of bought back with a whole bunch of my positions here, stock that I sold into the close on Friday. So I bought it back off the open, and then when we filled the gap, I kind of sold a lot of that stock again. I didn't think that the market was going to be able to give a real additional upside move today. Could it have happened? Sure. I just felt that it was very low probability. And honestly, I'm really impressed with how well the market held up. I was impressed in the beginning of the day with how well we rallied back. I wasn't expecting that we would just straight away fill the gap straight up like this, even though common gaps we know technically do get filled a lot. It was not my expectation. Qs were particularly strong, filled the gap kind of and then some. IWM was concerning because it was relatively weak. A lot of times when the Russell is relatively weak, it brings the other indices down with it. But eventually this IWM, not only did it eventually take control, but when the market was pulling back at one point here kind of midday, the IW, like at 310 here, the IWM's basically making highs, and the SPYs and the Qs were well away from their highs. So you had a little bit of an intraday flip on relative strength and relative weakness, some rotation there, which this is honestly exactly what you want if you're bullish. And I am bullish. I am bullish on small time frame on the daily chart because we broke out. You know, there's been plenty of reasons to become more bullish about this market, going back to that CPI and PPI print when the market handled bad numbers really well, to then when we had a breakout of kind of level one, resistance here in this 300 to 393 area, and then getting through all the events last week was just maybe the most eventful week of the year, considering that we had economic numbers and we had the Fed and we had all the big earnings reports, and the market held in really well with that also. So, you got to be leaning to the long side, I think, on kind of a smaller time frame chart here on the daily. At the same time, as I say that, we always need to be paying attention to our extension rules. So when we start getting really extended to the upside, honestly, as we start getting to like our third resistance area up here around, like 417 or so, 416 to 417, the area where we stalled out at the end of May and the beginning of June, you got to recognize that, whereas small picture, we've gotten a lot more bullish. Big picture, there's still a lot to be worried about. You still have a declining 200-day. You've got resistance areas that are approaching. It looks like much of this rally here has been a short squeeze rally, which is similar to what we saw in March. And we know back in March it didn't last. Can this one last? I don't know. Maybe, probably not at the rate that it's been. But the real question is going to be if new buying begins to come into this market. But if you are bullish, today was exactly what you wanted to see. The market held in really well. It was primarily a boring sideways rest day. I remember when I jumped off the radio at 10:30, and then Pat was jumping on. I was telling you guys, I would love for more than anything else for this to be the low of the day and this to be the high of the day. And I know we eventually made new highs by a little bit, but for the most part, that turned out to be pretty accurate. It turned into a really boring afternoon trading session, boring close. Market just was able to hold up really well. And that's exactly what you want if you're bullish. You're digesting this upside move. You're letting these moving averages catch up, and that's it. So that's totally it. From a trading perspective today, for me, it was mostly position management. Kind of already described how, it was a decent day for me just because I had sold stock into the close on Friday and was able to rebuy that on the gap down, and we rallied as well as we did and kind of was able to just book all that as profit. Netflix, my only new position, but I'm really small on it as it's kind of in this consolidation, and I understand that the market itself has to rest. There were some pretty good call outs in Roblox today. This was just a fantastic call out. This was one of the first growth names to really kind of go from red to green, showed that strength early. At one point when the market was pulling back, I think that was at about, where was that? Maybe that was around 10 o'clock. I don't exactly remember. At some point, the market had like a quick little pullback, and a lot of these stocks pulled back, and this Roblox, I think it was right in here, just held in tremendously well. So I know Josh was all over that early with a call out. I had discussed it in the morning meeting also for a long through like the 43 to 43.50 area. So Roblox, total money trade, awesome call out from the morning meeting, even as the market itself gave like a total rest day. The other one that was really on my radar that I did not get involved in, unfortunately, so I really like it down here, is Roku. Talked about Roku in the morning meeting. Roku also got destroyed on its earnings on Friday. I know Kathy came in and bought a lot on Friday. That was a kind of a headline that was out there, which she needs to because her price is absolutely atrocious, and I think she's down like, what was the number? She's down like $2 billion or something like that in her Roku position. So I just, at these prices, I really like Roku because I really think it's a buyout opportunity for somebody. and I was doing some research on this over the weekend. Walmart and Netflix are both potential suitors for this company. I think it makes a lot of sense for both of them. Netflix, it makes sense for them to own the rails. And I don't know if Abid is here because Abid asked a question in the morning meeting that I didn't really have time to answer because it requires a little bit more of a detailed answer, and I'm happy to go into it a little bit now. I used to be super bearish on Roku from like a qualitative fundamental perspective. As a matter of fact, cool. Um, as a matter of fact, Roku short, I think, is one of the worst losses I've ever had in my career. I got smoked in Roku in 2019 in this move when it ripped from 120 up to 176. I think I got out at almost the high on a short position. It just squeezed me to a point where I just couldn't hold the position anymore. And of course, that was the top, and it gave a massive pullback back to $100 before it went into a bubble with all the other growth stocks in 2020 and 2021. This move for all those growth stocks was just absurd. And by the way, look at this incredible double top, right? M pattern up here, which has totally fulfilled itself plus more. But my thought process on Roku had always been, I just don't get it. I just don't get the company. Like, it's just an operating system for TVs. And I never understood the competitive advantage of Roku over anybody else. And I was always saying back here in 2019 and 2018, there's I just don't understand the competitive advantage. Anybody can come in, like an Apple, like an Amazon, and or Google, who have unlimited money, and they should be able to make a operating system for your television that's at least as good as what Roku represents. And at that point, back in 2018, 2019, you had your Amazon Fire Stick and you got your Google, I forget what the Google TV operating system is called. You got Apple TV, and to me, it just seemed like a matter of time before somebody comes in and eats Roku's lunch. And the interesting thing is, it never happened. I had to buy a bunch of TVs for the house in Idaho there, and I remember exploring the TVs, and I ended up settling on TVs that have Roku as an operating system, just because it was still, several years later, just the easiest operating system to use. These other companies never did it. And now, years later, after these other companies never kind of created that operating system, all this time has enabled Roku to create a moat for themselves, where they just kind of at this point have a competitive advantage on it, and they're taking that competitive advantage and they're running with it. So they've got a partnership with Walmart right now, which is one of the reasons why I think that Walmart, exactly, it's one of the reasons why I think that Walmart could potentially become a buyout candidate for Roku. It just makes a lot of sense to me based on the partnership that they kind of already have, and they have their own televisions as well, right? Like back when I had this thesis for this stock, the operating system there, they didn't have their own televisions going on yet. And my understanding is that they're about to even make like a newer, higher level television that's supposed to compete with like the Samsungs of the world. And by the way, talk about operating systems. My dad at his house, he's got a Samsung TV, and the TV itself is great, but trying to scroll through cable television to Netflix to Prime TV to HBO Max is a super hassle. And again, it still just blows my mind that several years later, these other companies haven't been able to create a TV operating system that's nearly as good as Roku. And now, I look at myself as a consumer, and I always honestly like to use myself as a case study with my own purchases and things like that. And here I am, the person who is hating on Roku. I was hating on Roku so hard back in 2018, 2019, and now I need TVs, and I'm buying Roku TVs. Now, the stock got extremely expensive. This stock does not belong at $480. But when I'm looking at a pullback on this thing from this 480, 490, whatever it was, and this earnings report was certainly not good. Back down here at 60, that degree of a pullback, I don't think Roku's going anywhere. They're at a certain point. This isn't going. They're not going bankrupt. So at a certain point, if this stock keeps going down, they're going to get bought out, or they're going to base and they're going to work their way up. So I'm looking at an earnings season this year where we've seen so many companies that have reported not good earnings get totally bought back up. This Roku got wrecked on it, but put in a higher volume hammer. I'm looking at this thing at $60. I'm looking at the partnership with Walmart, and for me, a Netflix buyout makes plenty of sense also because it enables Netflix to own the rails, if you will. Like I've done a decent amount of research into streaming recently, coming into like this earnings report with the Netflix numbers and everything that's been going on. And when I really kind of dove into just looking at the numbers, the Netflix advantage compared to Disney Plus or Warner Brothers Discovery WBD, which has HBO Max, or you know Peacock or any of those other ones, Netflix is the one that is, free cash flow positive. They're the ones that are actually making money. I still don't love the streaming business, by the way. I think that in order to keep that advantage that they have, it's such an expensive business. But Netflix is the one that's doing it right. Whereas you look at Disney, I think I said this last week. Disney originally they were heralded as geniuses, during COVID for what they kind of did with Disney Plus, and it gave them a lot of multiple expansion at a time when if you were a company that was running a theme park, as an example, you would get totally destroyed. And now I honestly think that this is the opposite. I know Disney's caught a little bit of a bid here, but whereas this helped them so much back in here, I actually think if Disney never did Disney Plus, the stock would be at a higher price. Because if you look at the numbers, I think that Disney has lost like $6 billion or something like that on Disney Plus because it just cost them so much money to be able to run it properly. And they're not like an Apple or an Amazon that just has unlimited amounts of cash where they can just continue to bleed billions and billions of dollars to try to take market share in a space that's just become more and more competitive. Whereas you've got Netflix, and this is part of the thesis that's gotten me back into Netflix at this point, which is also super beaten up. I still don't love the streaming business, but this, along with YouTube, honestly, really has established itself as the premier streaming television watching service that's out there. If they were to own Roku, guess what? They could then make the Netflix app as that first app that's up there in that top left corner, right? That's what I mean by owning the rails. So I'm not saying that a buyout of Roku is going to happen. I have spoken about for a couple months now to pay attention for companies that are down. I don't know the exact percentage basis that Roku is down. It's a lot, 80 something percent maybe. But pay attention to these growth stocks that are down 75 to 90%. There's a lot of them. Some of them probably are zeros, but some of them I think have either a path to profitability and being a real business, or have the potential to be accretive to other companies in some sort of buyout situation. And that's what I've been paying attention to. And it's interesting to me that even like a Roku off of terrible earnings was able to get bid up. And that's been so consistent this earnings season. Honestly, like the only name that I can really think of off the top of my head, maybe AT&T and Verizon also, like the only real name that I can think of off the top of my head from this earnings season that has had a disaster report and didn't get bought back up on it is Snap. Everything else, like, look at that Coursera move. This thing was trading at $10 pre-market. Roku, the Shopify report. The Shopify report was not great. This thing was trading at below $30 on the report. Now it's back up to $36.50. This is another one that I have an interest in this area. Like, this is a real company. Do I like Shopify at $170? No, but $170 back to $30 after it's built a beautiful technical base here, and they're buying it up on bad news. And this is something you have all have heard me say 1,000 times, and it proved to be very true when you go back to the CPI and PPI numbers here in mid-July. When the market, and this works both ways, by the way, and I've seen it happen many times over the course of my career in both ways. When the market starts to buy these stocks up on bad news, or buy the market itself up on bad news, or at least not go down like it should, it's always a very notable thing. And the opposite is true also. I don't remember which quarter it was. I know Brant remembers because he brought it up the other day. But like that one earnings report that Apple posted that was like the most stellar report ever, and the stock like sold off on it. Like that's an example of the opposite, where you got to go, okay, this market's getting a little bit frothy here. It's probably not going to be able to continue its moves to the upside if they're selling the greatest Apple numbers, the greatest earnings report I've ever seen ever. Yes, I know that. It would be full circle. It'd be full circle to see if Roku came back to Netflix at some point in the future. But that's my thought process on Roku. And if anybody took that as a trade today, it was a really solid trade there from the mid 60s up into the low 70s. And considering that it was a pretty boring trading session, which is both what we were looking for and what we wanted, and we were able to find some diamonds in the rough with Roblox and Roku and a couple others. I consider that to be a pretty good day. So that's all I got for you guys, and I'm happy to answer any questions anybody may have. All right, so I'm going to scroll up here into the virtual trading floor and see if I missed anything. Looks like all Pinterest chatter in here. Where's our pins? Beast mode. Beast mode. You love to see it. Snaps that only one that can't catch a bid. Doesn't look like there are any new questions during the course of that meeting here. Does anybody have any specific questions? Any questions on anything? Trade that they took today, or yes, trade that they took today, or broader questions on anything, money management, psychology, anything. Happy to review them. Thank you, Judy. Thoughts on Oxy and earnings? So obviously no idea. If I had to guess, I would guess higher, based on what we saw from Exxon, based on what we saw from Chevron. These energy companies have been, performing really well on their reports. Oxy is the one that Warren is buying up the large percentage to float on. So, that also means that if people are trying to buy the stock, there's less stock that's available to be bought because Warren's got so much. So I like it, and I think this Ox looks really good above $66 technically. It's kind of a breakout level right now, so we'll see what happens on the report. ETBI. Trading up a little bit after hours. Is that why you mentioned it? Looks like it's up 40 cents after hours. Didn't do too much during the day and is catching a bid. This $80 is a level. Looks like it tried to get above it on Friday and failed and closed a little bit below it. And then the price action intraday today was really sloppy. And now for some reason it's catching like a 50-cent bid after hours. I don't know what I'm missing on that. It'll be interesting to see if Pinterest can start waking up some of these other growth stocks further. Like one thing I noticed, and I mentioned in the morning meeting, was that I wanted to see if growth could have any relative strength today while the market rests. And I think that was mixed. I don't think that was like a call that worked out 100%. I think it was mixed. There were some growth stocks that traded really well today, and there were some others that didn't really participate and didn't really perform. But that is kind of broadly what I wanted to see. And then we'll see if pins can help some of these companies potentially take another leg up tomorrow. VVIX traded up today. Is that what I'm seeing from this chart? How did you VIXI end up closing? Yeah, so this is warning signals that are out there, right? On the VIX. So let's pay attention to that. There have been days, like we've seen it at market tops, like short-term market tops that lead to potentially several week pullbacks, not necessarily leading back down to new lows or anything. Where when the VIX and the market start moving together, it can last for several days, but it usually can't last forever. So we'll see what happens there. But certainly notable how strong this VIXI was. I wish this could have done this on Friday when I had stock in this piece of garbage ETF. But it is what it is. It is what it is. So yeah, VVIX gap and go to the upside today is a notable warning signal. So today was a good day for the bulls from a technical perspective in the market. It's going to let these moving averages catch up further, but it still needs more time. So let's continue to note the dollar, let's continue to note the VIX, and let's continue to note that SPYs could still pull back tomorrow or over the course of a couple of days. We could pull back to SPY 400 and still be technically bullish on small time frames. It's a little bit more than I would want to see, but we could. Ideally, I'd like to see us not go back into this gap. 401.30 really on the low side. Your EDMA's at 402 quarter. But time correction here would be the best thing for the market. So pay attention to the VIX. Pay attention to this dollar. Dollar's been a big thing too. Did not do too much during the day. Shade just saying Microsoft buyout. I'm not sure what you're referring to on that. Oh. That's right. Also, Activision had earnings. That's why it's moving here after hours. But it's not a big move because this buyout's still supposed to happen. So you still have a lot of players in there. I don't remember what the buyout price was. Isn't it like 90 something? So this massive discount is the market saying, hey, there's a good chance that this might not be able to go through for antitrust reasons because Microsoft's already so big. And I know Microsoft has made indications to divest some of the ATVI assets in the buyout. But that's why this thing's trading at such a discount still. And that's why there's so much movement in it still. Usually when there's a buyout and the market's waiting to see if it actually happens or not, but they're pricing in a small probability that it won't, you see the stock basically flatline, like at a small discount to the price. That's not what's happened with ATVI. It's continued to be decently volatile for something that's going through a buyout situation. I think Warren Buffett's continued to buy it through this situation also. So that means that his thought process is, hey, it either gets bought out and I get my 90-something price, whatever that price was, 95. Thank you. It's like it either gets bought out, I get my 95 price, or it doesn't get bought out. The scary thing, if you're long in here, is if it doesn't get bought out, you ask yourself, well, is this a $65 stock? Because that's where it was before the news came out. And I would guess that Warren doesn't think that. He's thinking that this thing's either getting bought out, so I like it, or it's not getting bought out, and I've got a company that I like, and I can continue to build into it. So that's that. View on Pelosi trip to Taiwan. I don't know what the purpose of it is. I haven't really looked into it. My personal view is that, I wrote into the virtual trading floor earlier today because it just seems like no one knows this, which is interesting. And this is just my standpoint on it, right? My view, and we can try to discuss more importantly how it affects markets. But President Nixon in 1972, when he went to China, he said that Taiwan is part of China. He made that the official stance of the United States, and my understanding is that that is still the official stance of the United States today. That is why, if people remember, when Donald Trump took office, he took a call from the president of Taiwan or whatever it's called, and it was like a big deal because he technically wasn't supposed to do that. He's not supposed to take that call because Taiwan, according to the United States, is part of China. Now, there's a lot. It goes a lot deeper than that, obviously, on United States national security. I'm not an expert on this. What it really comes down to, in my opinion, is the fact that Taiwan Semiconductors is in Taiwan. That's it. That's it. Otherwise, I don't think we would care. But you got Taiwan Semiconductors in there. My thought process from the beginning is that it's our official stance that Taiwan is part of China, so we should respect what our official stance is, and then it's up to China if they want to allow our political representatives to go into the country or not. If there's a place for us to make a stand, it should have been on Hong Kong, because Hong Kong, there was a legal contract that says Hong Kong is supposed to maintain degrees of independence, I think, until 2050. So that's where there is an actual legal contract that was in place with Great Britain on the status of Hong Kong, and you could easily make the argument that China's violating that with what they're doing with Hong Kong and the influence that they're trying to put over it right now. But we didn't do anything about that. So if we didn't do anything about that, where you actually could make a legal case over things, how is it? That would be like China coming in and saying, like, we can't, I don't know, do something with Puerto Rico because it's not a state, or something like that. Like that's kind of, this doesn't make any sense to me. So that's my thought process on it. How it's going to affect the markets. I think it's a non-event personally. It's creating volatility. Is there a probability that would be awful for this would be terrible for markets, by the way, if China staged a military invasion of Taiwan? That's a potential black swan event for markets that people should be aware of and be prepared for. That I don't think it's going to happen. I really don't think it's going to happen. But if it were to happen, then how much is the market going to be gapping down that morning? Are we gapping down? Is that a 10% gap down for U.S. equity market on that? Because now there's all these fears about a war between China and the United States. I don't think that would end up happening. I really don't. But we should be prepared for outlier black swan events. North Korea is another one. I think North Korea is a non-event. I remember probably at least 4 years ago now, there was a period of time when North Korea was shooting off rockets and Rocket Man, and that was moving markets. But it always ended up being a non-event. They would shoot off a rocket. There'd be some news that came out of nuclear testing or something, and the market would quickly dip, and then the market would kind of always come right back up. So that's another, like, North Korea is another one of these, I think, outlier black swan events where is North Korea going to drop a nuclear bomb on Tokyo? What's the probability of that? Extremely, extremely low. If it did happen, if they can even do it, where does the market open that next day? Down a lot. So, it's always good to keep these things in the back of your mind, but my personal thought process is that they're non-events for the market at this point. Thoughts on a China delisting? Well, we saw Alibaba last week say that they're going to do whatever they can to keep their listing here. And I've also said, because there's been chatter on this as well for like a couple of years now, I think. I've also thought that it's not going to happen. China having the ability to list some of their companies in the United States markets has been very good for those companies. It's been very good for China. And honestly, until very recently, it's broadly been good for American investors. They're until this pullback that happened recently, like, I know it gave back a lot of its gains, but for a long time here, this Alibaba was a great product for American investors to be involved with as a stock, and gave fantastic returns. I know Charlie Munger's long, and I'm with Charlie on this one. I think that these companies represent good values here. They trade cheap, but they trade cheap for a reason, because there are always these exogenous risks, and which just happened, right? The exogenous risk of the Chinese government coming out and saying, hey, like, you're not allowed to continue to do your business. And we really saw that with like an EDU. Remember these Chinese education companies and what happened there? Oh my God. If you're an EDU, and I've hated this stock as long as it's existed, but if you were in this EDU at 170 and then the next morning it was at 18, sorry. So that's why I always say when it comes to these Chinese companies, I want to be involved in the Chinese majors. Like, there was issues here with Ant Financial and issues with Jack Ma and everything that happened. But Alibaba as a company is not going anywhere. It's too iconic. JD's not going anywhere as a company. Baidu's not going anywhere as a company. I don't think NIO's going anywhere as a company. I want to be involved in the Chinese majors when it comes to trading. And I want to do it when there's opportunities. The problem with these names recently is that they've gotten so sloppy to trade. And that might be because of the Hong Kong listings. But they used to basically trade like American stocks. Now they kind of trade a little bit more like ADRs, meaning they're very gappy every day, and those gaps make it very difficult to trade. I got burned the last time I was in Alibaba. Not too bad because my position sizing wasn't too big. But I was in Alibaba on the breakout here above this 120, and I was in it, I think, for 2 days. And then it gapped down because these things got really gappy. It gapped down like $6 on me or whatever, and I ended up probably getting out of like 113 or something like that. I lost more than I was planning on risking on that Baba trade because the gap was so big, which is always a risk on swing positions and keeping positions overnight that a stock can gap past your stop loss. I'm aware of that. That's why I have rules in place to try to mitigate that risk. But even with my rules in place of having a good profit cushion, everything else, this was a massive gap down that day, and I got burned a little bit on it. Is what it is. From Elliot, when you said the Roblox trade through the 43.50 area, where do you put your technical stop loss, right? If you're getting stopped out of it, basically is what you mean. I didn't take the trade, so we can look at it. So first of all, it's kind of always starting with the big picture. I had Roblox on the radar today, but I'm looking at the space between 43 and 43.50. So to start with, from an execution perspective, it means that what I mean when I'm saying, when I'm giving you a space like that, a range like that, which I don't always do. Sometimes I say the price, right? Yesterday's high, or this clear resistance price, $43. And sometimes I say a range. And what I mean when I say a range is like, this is the important area for the stock, and I need to see something on the smaller time frames that will actually give me the entry within that range, and of course the stop loss. So when it comes to Roblox, we know it showed really good relative strength in the last few trading sessions in here. It was very strong in early July. Like a lot of other growth names, it couldn't really give the continuation there. It had that pullback. But it more or less established this 43 area as resistance, right? Like, all right, fine. We got this one high here on July 8th, but it was just a tail high, not a closing high that went up to 44.50. But outside of that, we got this high here, 42.35, 42.45, 42.74, 42.99. What was this one? 42.72. So it's like roughly this 43 area. But on Friday, it tailed up and couldn't give continuation. It tailed up to 43.80 on Friday, and then was disappointing and kind of came back down to earth. So kind of because of this tail up, I'm creating the area as the area between 43 and like 43.50, where I want to look for a long entry for a daily chart breakout if I've got the confirmation that I want on a small time frame. And we got it. We got pretty good opening, consistent volume. We got the relative strength that was discussed. This name went green very early on compared to other growth stocks, compared to other stocks in general. This was one of the first names out there to go green. So my layers of probability are coming together. Relative strength, volume. I would not consider the market to be a relative strength, a layer of probability that was on my side with this trade. I can't look at the market today, like I was saying earlier, and this was one of my problems with any longs in general that I was warning about in the morning meeting. I can't look at the market with this degree of extension. I can't look at this chart in the beginning of the day here, even as we traded higher. We were just price correcting. We easily could have failed right at this ADMA, made a pivot high, and broke lows in the day. Very easily. So I'm not going to be considering the market on my side. But as far as Roblox itself goes, I got the relative strength, I got the volume, I got the breakout area. This is what I'm looking for. So where do I enter in a small time frame? Somewhere between 43 and 43.50 is what I ideally want. Ideally would like there to be a setup in this area, and there kind of wasn't. I know Josh had a very early call out. I think Josh called the inside 5 and up on this thing for the third bar of the day. That was a little bit too early for me. But if anybody got involved with Josh, awesome. But this third bar really became noticeable. Because again, just look at what Roblox is doing compared to where the spies are on the third bar, or even the Qs, which are relatively strong. Like not green yet, right? Roblox was really showing you something here. So basically what you got to do is you got to look at the volume on Roblox, you got to look at the relative strength, and you got to know the importance of the daily area. And you kind of just got to take your trade and just buy the stock in the area. The problem is the stop loss. So I think that purchasing 43 would have been much better than I don't think I'd buy 43.50 here at like the upper end of that range, because the move was too big into it. Because the stop loss I have to give has to be somewhere down here. Has to be somewhere down here, and that makes it trickier. If you use below the day, if you're buying 43.50, I think this inside bar becomes it doesn't matter, right? You're better off giving it to the low of the day. But if you could have Russian bots are hijacking my YouTube chat. Great. I'll let tech team know. Oh, and I forgot to make those small setting adjustments I'm supposed to make before I do YouTube on this computer. So I apologize to anybody if the sound's coming in quiet or you're hearing the beep noise that occasionally comes in. I forgot to make that adjustment. I remember to do it tomorrow. So I think that your best trade here would have been to recognize the relative strength because it was called out, and basically just buy it through 43 versus the low of that bar. And you could use the low of that bar because of the volume increase. You could also use the low of the day because that's your only pivot point at that point. Otherwise, you're sort of treating this as an ignition bar here with the volume increase, which it's kind of borderline on if that's technically correct, but I'm fine with it. So that would have been the best way to buy it. By the time you get into 43.50, I think the move is honestly too big. This thing just ripped on these green bars straight up from $42 to 43.50. You're chasing a $43 stock after a $1.50 move in 12 minutes. You've got no good point for a stop loss. I think it's too difficult. So then what do I do in that case? If I missed it, and I'm looking at it at 43.50, then you just have to look for a small time frame setup. And honestly, the next entry is right here. When we saw a lot of things pull back at this time, and this thing hold in perfectly with this inside 5, and the inside 5 is the enabler of the stock to get above the shooting stars, and we've spoken about that, right? Anybody who's taken my candlestick class, I usually teach it on the opposite side with a hammer, but it's the exact same thing here. Like when you have a downside extension hammer that's followed by an inside bar, you can take that inside bar in either direction, because if it breaks to the upside, the inside bar is confirming the hammer that you're probably going to be getting price correction back to the moving averages. But if that inside bar breaks to the downside, then most likely the hammer lows are going to break. If the hammer lows are going to break, it usually leads to a whole nother wave of selling. This is the opposite. Gets extended. 3 big bars in a row. Shooting star type candlestick. Next one's also a shooting star type candlestick. Third one's an inside bar. Inside bar breaks to the upside. That becomes your catalyst that causes these shooting star highs to break. If the shooting star highs break in this area, you're probably seeing good upside continuation. And that's exactly what happened here. So again, we're starting pre-market. We don't know at 8:30, 9 o'clock in the morning how the market is going to necessarily react or what's going to trigger. So we're looking at our daily charts. We're trying to figure out the important areas that we can pay attention to for our entry points. But then we got to see how the intraday actually works out, especially when we're looking at a range, because it's not always going to be perfect. And sometimes it's something you can't even take at all, right? It's just too much risk, or the risk reward doesn't make sense, whatever it is. But in this case, I do think it gave you some opportunities. First of all, shout out to Josh. He was a little bit more aggressive than I personally would choose to be, but he called out a great early buy in this thing. I think at the 42.40 spot, might have been even a little bit better than that. And then if you didn't have that, 43 versus the higher volume bar low, or I don't like the 43.50 as an entry, but this inside 5 for continuation here is your next spot. So good question there, Elliot. From Rebecca, can you discuss your strategy for trading off the open? I heard you mention, and I've seen the best risk reward buying low off the opening price movement, but I'm still working on finding the low before the price gets too far away from it. I'm not really sure on the second part of your question here. So yes, I personally think that trading the open is the best risk reward opportunities that you can typically find in a day. My best trades are usually trades I'm executing honestly in the first 5 minutes of the day. And definitely the first 30 minutes of the day is usually best for me. I don't find that's always true with brand new traders. Brand new traders sometimes struggle at the open because of how fast things are moving and the wider spreads and the lower liquidity. Basically the same things that I think give more experienced traders an advantage can oftentimes be a disadvantage for someone who is a little bit newer. So trading off the open is going to be in a lot of ways like trading anything else. It's the same setups. I'm not just looking for some sort of, this is the part where I'm struggling with on your question. I'm not looking for some low and just buying before the price gets too far away from it. I don't really know how to do that. That's not an executable setup for me. Executable setups are breakouts that are occurring. breakout that occurs in the first 5 minutes of the day, the first half hour of the day. Early on, flag type patterns on earnings names could be something that I look at. But usually, I think like the number one kind of trade there off the open, like in that first 5 minutes, is when you're having a very early breakout, and then it's a standard breakout trade. You buy the breakout. The ignition bar is the first bar of the day in that case potentially, or the second bar of the day, and you're using that as your stop loss. So I hope that helps, Rebecca, and would definitely encourage you to review or re-review my training program classes if you have access to them, because I think it gets into some of that. From Hemming, any potential trading opportunity for the Tesla annual meeting? Well, I don't know when the Tesla annual meeting is. I assume it's soon, maybe tomorrow. That's why you're asking about it. It's just something that puts the stock in play. Anything that puts the stock in play provides potential trading opportunity. So, higher volume than typical, higher ranges than typical, and just look for opportunities to present themselves on it, or know when the day is. If it's tomorrow, and you can find a good daily level or something like that you can trade off of, that's something to pay attention to. At this point, this Tesla move was just too big, I think. Tesla pulled back that much intraday? It did. Tesla was so strong, so early. I remember my mind was blown when I typed the stock up at 940 to see that it was up this much. And it ended up giving a shooting star on the day. This thing's so extended. This needs a technical pullback. And this is a potential signal of a technical pullback. If the annual meeting or whatever that you're talking about is tomorrow, then who knows what's going to happen, but it'll put it in play. For my buddy Robert, good to see you. Would you say today's TLT strength has something to do with Apple is selling their denominated? I have no idea. I wasn't even aware of that information. On Apple selling that debt, selling those notes again. I don't think that would affect the treasury market as big as Apple is, but I genuinely have no idea. Interesting to see how strong this TLT was today. Yeah, really strong close here for TLT, freaking higher. From Trade 117, do you have any thoughts on sizing up without losing your psychology, and how to adjust your daily P&L stop loss after sizing up? Yes, I do. I have strong advice on how to size up properly. Size up slowly over time. Size up slowly and proportionately over time. This is a mistake I've seen it made many times. Trader's doing well. Trader's happy that he's doing well. Trader starts to extrapolate in his brain how much more money he could make if his size was quadruple as big, and then comes in and does massive sizing up of his trading or her trading, and then the numbers just become too big. It messes with the psychology, or they have a couple down days in a row. Like they just traded at lower numbers for a month, and they were all really consistent for a month, and they size up massively, and 2 trading days erases the entire month. It's not what you want to see. And I can tell you from personal experience, like having really big jumps in P&L swings can mess with you. The key is small increases over time. And I can tell you the way that I did it. The way I did it, I don't think is the right way. It was just the way that I came up with when I was a newer trader, and it's not what I recommend now. When I was a new trader, when I first started trading, what I was doing is I was increasing my maximum tier size by 200 shares every time I had a positive week. So I started with a 200 share tier size, which I also don't recommend anymore. I recommend starting with a little bit bigger than that if you're a pro trader for game planning reasons. But I started with a 200 share tier size. I had a green week, I went to 400 shares. I had a green week, I went to 600 shares. I had a green week, I went to 800 shares. I had a green week, I went to 1,000, 1,200, etc. The problem was I got too big too fast because I was pretty consistent very early in my trading. The other problem is it's not tier size that matters, because you could buy 1,000 shares and risk $100, or you could buy 200 shares and risk $100, depending on the space risk that you're giving. So I don't recommend sizing up based on tier size the way that I did it. I recommend sizing up based on dollar risk amounts now. So if your average risk that you're taking on a trade is $100, maybe every time you have a positive week, you add on 10%, or maybe it needs to start with a little bit bigger than that because the numbers are starting small in my example. But you add on 20% onto your maximum, your average trade that you're taking. So if your average trade risk was 100, you had a positive week. Next week you're gonna have your average trade risk at 120. You have a positive week. Your next week you're going to 140. And yeah, your swings are gonna start getting a little bit bigger, but it's not in such a big way that it's super noticeable. It's like think about how the human mind works, right? Like, and the best example I can come up with is like if you look at how kids grow, right? Like if you are like a parent or you see a kid very regularly, or a teacher, you see these kids very regularly over the course of a year, you might not really notice that they're growing. But if you are like an uncle or an aunt, and your nieces and nephews or whatever, they don't live near you, so maybe you only get to see them once a year. Oh my God, you got so much taller, right? The P&L swings, that analogy is going to kind of apply here also. If you have $1,000 intraday swings as normal for you and you're comfortable with that, and now all of a sudden they're $1,200 swings, it's not going to be too big of a deal to you because you were having $1,000 swings. So certain outlier days, you're probably having $1,500 swings or $1,700 swings. Now that average becomes $1,200. You don't really notice it that much. But if you go from having $1,000 intraday swings to having $5,000 intraday swings, all of a sudden it's like, oh my God, what's going on here? These numbers are so crazy. Oh my God, my P&L just pulled back $3,000, and you're biting your nails, and this is crazy. So that's how I recommend it. That's how it's been, for me with my career. Like the P&L that I swing back and forth on a day to day at this point in my career, I should say, are numbers that would probably literally make me sick to my stomach when I was a new trader. But for me at this point, it's okay. I just had, I have $10,000 intraday swing. It's okay. I just had, just my P&L just moved $10,000 up or down over the course of the last hour. Like it's very normal to me. I remember the first time I took a $700 loss as a new trader, I wanted to crawl into my desk and cry because it was such a big number to me then. So that's how I recommend it. Cool. Yep. From Paul G here, the open used to be my best time to trade early this year, but it has become more difficult for me and it is my worst time to trade. Do you see a change in how the open trades? Is it increased? Is it the increased volatility, low liquidity? I haven't really noticed anything, which doesn't mean that there hasn't been a change. To be honest with you, Paul, we do know that there has been less liquidity in the market as a whole this year. So, if you're comparing yourself to like 2020, 2021, it's an entirely different market environment in 2022. So it could just be that it's an entirely different market environment, right? We're certainly moving. Was it 2019 or 2018 that we didn't have a pullback from highs to lows, even over multiple days, more than 2% in the entire year? Does anyone remember that? It was crazy. I remember those statistics. That was the talk of the town. I don't remember if it was 2018 or 2019. I don't think we had a single pullback the entire year that was more than 2%. It was like the least volatility, I think, of any year in the history of the stock market. Compare that to 2022, we gap up and down by more than 1% almost every day. It's nuts. So I'm not sure exactly where you're comparing it to. Definitely pay attention to your statistics. It's been a very different market environment this year. Broadly, and it's worth repeating, I don't know to the degree to which it affects you. I've just noticed over the years that it tends to be that more experienced traders do really well in the first half hour, but newer traders don't. And newer traders tend to actually find their sweet spot as far as time of day with P&L between 10 and 11, because you still have good opening price action where things are moving, but the market has tightened up. So you don't have the low liquidity, but you're still getting good movements. The traders have a little bit more time to think and kind of digest, and that's important for newer traders. I can tell you that everybody seems to have their worst numbers, newer traders and experienced traders. Everybody seems to have their worst numbers midday, like 11 to 2 p.m. period. Almost, I wouldn't be surprised. I don't know this, but I wouldn't be surprised if every single trader in this room, if they were measuring their statistics of trading by time of day, would find that their lowest profitability is in those hours. So yeah, I hope that helps a little bit. Cool. Scrolling through another VTF looking for questions. Rowan, thank you for posting this. Rowan, I know that's not a question from YouTube, Rowan. I know you just posted that. That going not from YouTube. Thanks. Cool trade boom 7. Glad it helps. Matt, come on, bro. All right, gang. Looks like we got through the questions. Good meeting today. Glad you guys brought questions to the table. Love it. That's how we make progress. So have a great rest of your evening. I will talk to you all tomorrow.